All right, in a little bit of irony, given how bearish market breadth has been most of this year, market breadth now actually is a relief. It is just churning around and it's giving neither a bearish or bullish signal. What do I mean by churning around? Well, this box here, let's just draw the box right around here. And to me, all this says is that market breadth is hanging out. It's above that 50% current cycle support. It's not in a rush to test the overbought level where the next bearish sign might occur. So I take heart in this, and it's one of the main reasons why I'm not yet alarmed by the memory reversal that I'm going to show soon, coming up short and not being enough to reverse a breakdown in tech. Let's take a look at the so this is the percentage stocks trading above their 50-day moving averages, what I like to call AT50. And it is my favorite technical indicator, and it closed at 56.8%. Now let's go to AT200, the percentage of stocks trading above their 200-day moving averages, and you can see pretty much the same thing. It's churning. It's above an important support level at 56%. It closed the week at 57.3%, and I'm pretty satisfied that there's neither bearish nor bullish signal here. So that's all good. Now we get into the more concerning parts, okay? So for instance, here is the S&P 500. Look what happened. It not only broke down again below this former double top, so that puts the double top back into play, but it also broke down below the 50-day moving average, which is that red line. There was some intraday churn. Let me just zoom in here so you can see it. You can see it right around here. I'm going to draw a box from the low of the day to the high of the day. And you can see there's a pretty wide range where buyers and sellers were battling each other. But at the end of the day, it's a 50-day moving average breakdown. It's the beginning of a bearish move that particularly concerns me because, again, it's below the former double top. The NASDAQ worries me even more because not only did it confirm a breakdown below the 50-day moving average, again, that's that red line, but it's also below, once again, the previous downtrend that had tech bearish since June, essentially. And I was hoping in my previous video, previous blog, that this breakout here, this breakout point, was bullish and would result in a continued rally higher. Instead, the NASDAQ stalled here. It pivoted around the 50-day moving average, and then this big breakdown. So now the NASDAQ is in bearish territory. If it drops below the closing low of this recent cycle, which is right around here, the first of three successful tests of the 50-day moving average, it's going to be in free fall land until about the 200-day moving average as support, which is the blue line, and it just happens to be converging with the double top at former all-time highs earlier. This was last year. So that was an important level, converged level for the NASDAQ to hold. And let me just put a box there so it's extremely clear what I'm talking about. And now let's go to IWM, the ETF of small caps. It is hanging in there. It is still well above the former double top, which again is this purple line, and it's still above its 50-day moving average. So IWM, the ETF of small caps, is still bullish. I went ahead and speculated on a call option. I think it was a 297.5 call option that expires on this coming Friday. Let's take a quick look at the VIX because I said it was in danger of popping. Sure enough, it popped, and it's now above the pivot line again. It popped. The VIX closed the week at 18.8, and it jumped 12.2% on Friday. It's still overall churning. You can kind of see that it's been pivoting around this purple line, but I did see the evidence of an impending pop. I couldn't time it, of course, but I'm not surprised that it did jump as it did. So here is Round Hill Memory ETF, ticker symbol DRAM or DRAM. Here is the big reversal of the day. The stock gapped down right here, and pretty much buyers took DRAM higher for the rest of the day until, look at this, hitting this perfect resistance which I drew at the former blow off top. That was blow off top number one, right around 55 bucks, and then faded away to almost flat, fractional gain, 0.7% for the day. So this reversal came up short in two ways. One, it came up short for itself because it didn't break out above what is now resistance. The breakdown of the 50-day moving average is still in play, so DRAM is bearish. And then, of course, it did not prevent the NASDAQ from confirming its breakdown and generating a bearish picture. So this has me worried. I have been trading DRAM on very short-term plays. This last round is not successful so far. I was playing this bounce off of support and then got caught a little bit with this breakdown, and then I held, thank goodness, through the reversal here. But DRAM does seem to be breaking down. You can see the second blow off top here back on June 22nd is still holding as a topish feature for memory, and also meaning that memory has become a very precarious trade and a very precarious place. Now, its close cousin, the VanEck Semiconductor ETF, ticker symbol SMH, broke down below this red rectangle that I've been pointing out for a while, and it has confirmed it has further confirmed its 50-day moving average breakdown. In fact, let's zoom in here. You can see volume was very high, so semiconductors are still rolling over based on the ETF. This is topping action, and just as a reminder, despite this breakdown, SMH has still had a blockbuster year, and it is still doing quite well. Unfortunately, because of this strong run-up here, and this is the disadvantage of very strong run-ups, is that they create very little natural support. So if the sell-off really does take root and accelerates, we could have SMH test its 200-day moving average in short order. That would be probably at the current pace of selling, maybe around 450, maybe around 460. Now, let me show you some individual semiconductor and AI-related plays, some good and bad. This is Air Test Systems, ticker symbol AEHR. It had a big up day post-earnings. It closed up 21.9%, but I think it almost got back to its previous all-time high before fading, and now it is actually starting to fill in that gap. So that's bearish trading action, unfortunately, on the fade for AEHR. So I went from impressed to now worried for this semiconductor and AI play. Next, I have Applied Materials, ticker symbol AMAT. You can see here it has tested the 50-day moving average. It fell 5.6%. Yes, it had a little bit of bounce, but it still faded from its intraday high. I'm watching this one very closely this coming week to see if there is a bounce. But otherwise, Applied Materials is looking pretty precarious, like a lot of its semiconductor cousins. ARM Holdings, ticker symbol ARM, is already in an ongoing downtrend from its June all-time high. I will show this. It's trading down. It's confirmed a 50-day moving average breakdown. So it is in bearish territory. It's another semiconductor that's in bearish territory. And then we have Celestica, ticker symbol CLS. And it had a breakdown, very bearish breakdown below its 200-day moving average, which takes it back to where it last traded in March. And now it's trading negative, pretty much actually flat for the year. You can watch this. You can see this red line here. It's pretty much flat. So we see various elements of the AI trade are topping out, breaking down, and just not looking good at all as money continues to slowly but surely grind out and rotate away from this sector. Here is IONQ, ticker symbol IONQ, my favorite quantum play. And I'm showing this one to show that there are other speculative sectors of the stock market that are not doing well. IONQ last peaked out at the beginning, let's just call this the beginning of June. And if I peel back, you can see it stopped short, well short of its all-time high set last October. So it is slowly but surely topping out. And this steep selling here is very concerning. And on Thursday, I noticed, I saw on briefing.com calling out a high amount of put volume for the the August 20 strike expiration. I'm skeptical that IONQ will drop anywhere close to 20. So what I did was I did a hedge play. I bought a bunch of those puts, but I also bought I think a 40-50 call spread in case all that volume was really just someone selling a bunch of puts in preparation for a big sharp reversal in IONQ. So keep an eye on this one. I've got my eye on this one. I definitely am not interested in buying shares. This is a total speculative trade on a speculative stock. Speaking of speculative, Robinhood Ventures Fund, ticker symbol RVI. This is one where I may have gotten caught. Now it is back. It dropped on Thursday, July 16th, back to its IPO price of $25. And as you recall, when I noticed it dropped to that level, I waited for a pop, bought it here. That's April 22nd, and experienced a nice run up, but I sold short of it going parabolic. And I've been watching RVI ever since, just reversed that entire move since its all-time high in May. And what I did was I put in a stop buy on a move above this last candle. I thought it would take some time, but I got caught. RVI popped 10%, triggered my buy, and then proceeded to fade. So now my position RVI already looks pretty precarious as this downtrend. And of course, let me just make it clear what this downtrend is. Continues, right? It's not broken yet. And my buy stop was supposed to buy it on a breakout, but that didn't happen. All right, well, let's look at some good news. The other curious thing about what's happened in the market is that financials started off earnings week overall pretty good, and XLF, the State Street Financial Select Sector Spider ETF, had a good week. You can see this rally here, right? I mean, yes, there was a hiccup last week on Wednesday, but it's been rallying ever since, even despite today's 0.9% pullback. And if I look back, XLF has hit an all-time high. So it is today's fade put it back, took it off its all-time high, but still, you can see money has been rotating essentially out of tech, out of AI and semis, and into sectors like financials. Mea culpa on block, ticker symbol XYZ. It just has been grinding higher slowly but surely. I can't be bearish on this anymore from the technicals. It still hasn't broke out above its last peak area, but it sure looks like it wants to do so. So I'm just going to stay back. I'm not going to try to fade it from that level, and instead watch to see whether it drops below the 50-day moving average. But again, mea culpa that this has not become a bearish play like I thought it would. I'm now, after that big move post IBM's news, that big move in cybersecurity stocks post IBM news, I've been watching the cybersecurity stocks a little bit more closely. This is the Hack ETF, otherwise known as Amplify Cybersecurity ETF. After the IBM move, Hack jumped 4.6%, but then the sellers came in and pretty much reversed most of those gains. It gapped down on Friday, finished the reversal of those gains, but pulled off a 0.9% gain. So let's just say that the IBM news jump for cybersecurity is pretty much a wash and done. So now we just go back to the regular business as usual for cybersecurity. Not business as usual for cybersecurity is Rapid7, ticker symbol RPD. I have long wondered why this stock has been so weak. If I pull back, you can see what I mean. It peaked way back in 2021 and has been collapsing ever since. It is, got up to about 140. It is about 90% or so of that value or less. But I like this move, breakout above the 200-day moving average. Again, that's the blue line there, and it's been holding. So I have this on my list as a potential buy. Of course, earnings, I think, is going to be coming up in a few weeks, so I have to be very careful there. But I am liking the technical move anyway. It looks like it's been bottoming out. And then software stock that I talked about, Sprout Social, ticker symbol SPT. I did take profits at resistance at the 200-day moving average. I didn't like a lot of the churn there. I really wanted to hold for a breakout. The breakout finally came on Wednesday, and Sprout Social, ticker symbol SPT, is just barely holding on. I'm going to keep an eye on this. I'm not going to chase it if it continues higher, but I do want to keep an eye on this as part of the general recovery in software stocks. More good news in the market. Apple has just been blazing higher ever since the market panicked after it announced these memory and storage price increases have forced them to increase the price of MacBooks, iPads. It is just so rare to see such a rapid reversal in sentiment. It started with this day, which was up 3.1%, and then almost nonstop buying here all the way to fresh all-time highs. Pretty incredible move. Apple's a very expensive stock. I'm not going to buy it. I'm not going to chase it here, but I just wanted to point out that of the Mag 7, Apple now has taken back the lead, and for a brief moment, it retook the crown as the planet's biggest publicly traded stock. All right, Reddit, ticker symbol RDDT. I am looking at this one because it is testing the 200-day moving average as support. Earnings are coming up, so I'm not going to rush into it. I think it should have another positive response to earnings. So if it stays above the 200-day moving average, and particularly above the 50-day moving average, I just might speculate on a small amount of shares. So that's Reddit, ticker symbol RDDT. Another one that popped into my radar, and this is Thomson Reuters Corporation, ticker symbol TRI. Just like a lot of its peers, it's completely collapsed since last year. It was as high as 218, but as a trusted news source, I like the prospect of buying this. It looks like it is trying to bottom. I'm going to draw a very wide range here with this black box. So it's not quite out of that box, but I do like the way it is broken out above this lower box. Just barely broke out. So if it can get higher than last week's high, I'm a buyer and I am an accumulator in Thomson Reuters Corporation, ticker symbol TRI. Big disappointment in Caterpillar, which is now, of course, an AI play, ticker symbol CAT. Michael Burry's short has been very prescient, very timely. I tried to fight his short right here when CAT was testing its 50-day moving average. It looked like it was going to be pretty positive. And then on Wednesday, it broke down. Thursday, it confirmed it with a big gap down and a loss of 4.1%. And now Caterpillar is looking like it's joining its other AI-related peers in rolling over and breaking down. Caterpillar is now bearish. On the trucking and logistics side, we have C.H. Robinson Worldwide, CHRW. Remember that big AI panic way back in February that I was very skeptical of? CHRW dropped 14.5%. It could not quite recover until just this last month. In the interim, it also collapsed because of panic about Amazon announcing a supply chain services. And this panic between these two panics, it looks like the motivated sellers finally got washed out, and now CHRW is trading at an all-time high. I didn't have enough guts to stick with this one through all the churn. I can't remember exactly what it was. I did buy into the first panic, took profits around here. I think I traded again one more time. I just wasn't brave enough to hold. But if you can see here, there was a Supreme Court ruling that impacted trucking that finally represented the bottom, where CHRW traded below its 200-day moving average, but then bounced right back. And that was the final bullish sign that this stock was on the move back higher. I just never chased it, but I do like looking at these kinds of things because they're great lessons in how panic can create buying opportunities and how selling into a panic is very rarely a good strategy. All right, let's move on to Cintas Corporation, ticker symbol CTAS. They are basically a provider of uniforms. So there's usually a correlation with the labor market with CTAS. And I really missed out on a good buying opportunity. Let me just show you here. post earnings, it gapped up above its 200-day moving average, gained 4.3%, and continued higher. It got parabolic, and now it's just not a good risk reward spot to buy. So I'm just waiting for this thing to cool off a bit, and I really like buying this on the breakout. You can see it got above its previous high as well. So here's the current level, and there's the previous high over there. Looking good. CarMax, ticker symbols KMX. Remember, I talked about this before. I put in a hedge trade, hoping that CarMax would actually pull back, give me a spot to buy. It did not pull back far enough. And this week's breakout did take me out profitably for the options because I was able to cash out nicely on the call options part of the hedge. And somewhere in here, I think on the breakout on Wednesday, I finally just nibbled on a few shares as well. Oh, sorry, I think I nibbled somewhere in here. Sorry, I can't quite remember. But needless to say, the bullish case continues for CarMax. Fantastic recovery. And it is now reversed this big earnings drop it had last year, 20% down. I believe, let's just see, yes, this is a complete reversal now that's happened. So that's very positive for CarMax, ticker symbol KMX. Lucid, ticker symbol LCID. This was the craziest move of the week. The stock plunged up to 57% on Tuesday after electricvehicles.com claimed that the company was mulling going private or filing for Chapter 11 bankruptcy protection. This news seemed to confirm all of my growing concerns about this company. And once the company denied the rumor on the same day, the buyers just shot this stock back up. Now, it still was down 16%. So I thought maybe there was still a kernel of truth. Nope. Stock soared again the next day, 28.8%. Jumped again, 8.6%. And then on Friday, it gained yet another 13.9%. Needless to say, this looks like a major squeeze that a lot of bears got caught chasing the bad news here and either shorted the stock or bears that were already in the stock just took too long to get out and lock in their profits. So now this has me wondering, did this move wash out all the motivated sellers? You can see that the volume was extremely high that day. In fact, I bet you it's the highest volume. Yeah, it's the highest volume it's had in a very long time. So now I'm very interested in Lucid because guess what? It now has a higher high finally. I don't have confidence in the business operations anymore. I didn't like the reverse stock split. The stock has collapsed soon after that. But hey, if the technicals are saying that something good is happening, maybe I will dare to buy this stock one more time. All right, as I noted, there are some sectors that are benefiting. Healthcare has been another one. Abbott Laboratories, ticker symbol ABT, had a huge jump, 10.7 post earnings gain on Thursday. The momentum continued on Friday with a 1.9% gain. Now, Abbott is a broken stock. You can see here, it basically went nowhere since, let's just call this, it had gone nowhere since the year 2020. So this bounce looks impressive by itself, but in the longer picture, it has a lot of work to do, but it looks like that work has begun. So I'm looking for a spot where Abbott cools down to start buying some shares. And finally, on the international tip, we have ticker symbol EWZ. This is the iShares MSCI Brazil ETF. Readers may recall that I have a 20% rule on Brazil, on EWZ. Whenever it falls 20% from its last peak, I buy. I somehow missed the last 20% signal. So from this peak here to this one was just about a 20% drop. I only noticed it because EWZ came up as a buy on CNBC, and I looked at the chart, and lo and behold, I should have bought this as well. So I started buying shares on the 50-day moving average breakout. You can see it's pulled back again. I'm interested in buying some more shares in this coming week as part of that 20% rule. All right, this is Dr. Duru from AHA Analytics with the Market Breadth. Thank you for checking this out. As always, you can subscribe to the channel if you want to see more video content like this or get notified by it. Put your comments and feedback down below. Always happy to answer questions. And as always, share and like this content so the algorithm knows what's up. Thanks again, everyone, for checking this out. Have a good week and take care.